Hi, I am your Tally Guru Abhijit Joshi, and this is Skilled Prime User, a unique course designed to train you on the use of Tally Prime. In this video lesson, we will discuss the basics of accounting, specifically the double entry system. In this method of bookkeeping, every financial transaction has two aspects, debit and credit. In this method of accounting, two or more ledgers are either debited or credited. It is essential that the total of debits and credits always match. To understand debits and credits, we will discuss the first 8 transactions presented in the practical handbook for the company Gokul Cold Drink House. The first transaction was on 1st April 2023, where we purchased 100 liters of milk at the rate of 40 rupees per liter from Lalu Milk Mart, so the total bill value was 4,000. As I told you, there are a minimum of 2 ledgers involved in a transaction. If one is Lalu Milk Mart, then what is the other? Can anyone in the class tell me? Anyone? Who will answer this? Shailesh?
Sir, I guess the second ledger will be milk.
Oh, well. Can anyone else guess? Savita?
Sir, according to me it is Gokul Cold Drink House.
Oh, no. It looks, Savita, you got confused with the word. We, if you are looking at it that way, we purchase the goods. Then your thinking is right. We here is Gokul Cold Drink House. We refers to Gokul Cold Drink House, the company for which the books of accounts are maintained, not a ledger itself. The company, Gokul Cold Drink House, can never be a ledger within its own books of accounts. Think of it this way. If there's a playground named Gokul Cold Drink House, and the events happening in the games represent transactions, then the ledgers are the players. The playground itself cannot be a player, just as the company cannot be a ledger in its own books of accounts. Shailesh. Milk is not a ledger. It is a stock item or a type of goods that we have purchased. Therefore, it cannot be a ledger. We will purchase milk and sell it. Am I right?
Yes.
Well, just now speaking to you, I used two words, purchase and sales. In our case, we are purchasing goods, so we will need a ledger to record the purchases. And so, we will need a ledger by the name of purchase account. Later, when we happen to sell these goods, we will record it in the sales ledger. In order to record all the purchases, we will require a ledgers by the name of purchase. And to record all the transactions related to sales, we will require the sales ledger. I hope all of you got my point.
No,
sir.
Okay, I will explain. If we purchase goods from Lalu Milk Mart twice, the posting will be done in the ledger of Lalu Milk Mart and 2 entries will appear in the ledger of purchase account. So, whenever we purchase goods, the entry will be posted to the purchase account. Now, if we purchase goods from Royal Dairy Farm on 3 different dates, 3 entries will appear in the ledger of Royal Dairy Farm, and 3 corresponding entries will be now posted to the purchase account. Now we can see that there are 5 entries in the purchase account. When we purchase goods from Lalu Milk Mart, we posted the entry in the ledger of Lalu Milk Mart and in the purchase ledger. Here, one transaction has affected 2 ledgers. One ledger was credited and the other was debited. This is what is called double entry. Now the second time we purchase goods from Lalu Milk Mart, the posting will be done in the ledger of Lalu Milk Mart and the ledger purchase account. Now the third time when we purchase goods, this time from Royal Dairy Farm, the posting will be done in the ledger of Royal Dairy Farm and the purchase account. The next 2 purchases will also be posted in the same way. I assume that all of you have understood what a purchase ledger is.
Yes, sir.
Just as the purchase ledger is used to record purchases, the sales ledger is used to record sales. When we sell goods to a customer, entries are made in both the customer's ledger and the sales ledger. Amar, did you understand?
Yes, sir.
What happened? Tapendra, why do you look puzzled?
Sir, I understand what a sales ledger and a purchase ledger are. But I'm a bit confused about this CR and DR.
It's okay. CR and DR, meaning credit and debit, Leave that to me. I will explain it to you shortly.
Sir, I have one more question.
Yes, go on.
Sir, the first two letters of the word credit is CR. Then why is debit DR and not DE?
Nice question. There's no definitive answer, but the most widely accepted explanation is that DR comes from debtor, just as CR comes from creditor. Some believe it originates from the Latin word debre, which means to owe. Since debre contains an R, it might have influenced the abbreviation. I have to say, it is part of tradition. Over time, bookkeeping practices standardized DR for debit and CR for credit, possibly to maintain consistency with debtor and creditor. So traditions and customs are difficult to break, so let us keep DR for debit. I wanted to tell you one more thing which I forgot. I must specify here. The purchase account is an expense and the sales account is our income. Imagine you go to the market and purchase groceries, you have incurred an expense. Conversely, if you are a seller and go to the market to sell goods, you generate income. Tapendra, you had doubts about the posting of debits and credits. I will explain this concept to you in a simple, layman's way. Now, let's imagine that our company, Gokul Cold Drink House, has a godown to store goods. This godown has two doors, one called the purchase account and the other called the sales account. We use the purchase account door to bring goods into the godown, and we use the sales account door to remove goods. So, the purchase account will be used when we purchase goods from our supplier, and the sales account door will be used when we sell goods to the customer. We will now discuss the first transaction. In this transaction, 100 liters of milk was delivered from Lalo Milk Mart to us. The delivery was done by a truck. Invoice or a bill was given by Lalu Milk Mart to us. Before this, I have told you about my arrow rule, where we give debit towards the direction of the arrow and credit to the other side. Now here the truck carrying milk is moving from Lalu Milk Mart and it is entering our purchase account door. We can now say that the direction of the truck is towards our purchase account door. We will better call it only purchase account. So in this case, the purchase account will be debited by 4,000, that is the total value of goods, and the ledger of Lalo Milk Mart will be credited by 4,000. I will repeat, posting will be credit Lalu Milk Mart 4,000 and debit purchase account 4,000. Have you understood? Is it all okay with you?
Yes, sir.
Good. Let's go forward with the next transaction. Now on the same day, we sold 100 liters of milk to Yadav Sweets. Now that truck filled with milk went out from our sales account door to Yadav Sweets. As you can see now the goods are moving towards Yadav Sweets, and so the direction of the arrow is now pointing to our customer. The value of the goods was 7,000. So in this transaction we will debit Yadav Sweets by 7,000 and credit our sales account by 7,000. Now in the third transaction, Yadav Sweets gave us 5,000 against the sold goods. You can now see that the cash was given by Yadav Sweets. This cash was deposited in the cash box. All the money going into the cash box and going out of it will be recorded in the cash account ledger. Now here the direction of the transaction is towards the cash box. So we will debit the cash account by 5,000 and credit the ledger of Yadav Sweets by 5,000. Next, the transaction is similar to our transaction number 1. On receiving invoice of goods, we will debit our purchase account by 5,000 and credit the ledger of Lalu Milk Mart by 5,000. We will now move to the next transaction. In this transaction, we paid Lalu Milk Mart against the outstanding balance. Here we took out the cash from the cash box and this cash was sent to Lalu Milk Mart. The direction of the transaction is towards Lalu Milk Mart. Here we will debit the ledger of Lalu Milk Mart by 3,000 and credit the cash ledger by 3,000. The next entry is entry number 6. This will need a bit of explanation. A college approached us for services. They informed us that they would be ordering snacks or preparing them on campus while we have been asked to serve the ready food. This type of work is called catering services. Upon providing the services, the college immediately paid us 6,000. This means the services were not given on credit as we received cash directly. In such a case, the name of the college will not appear in our accounts as the payment is directly recorded under our income catering services. So now, the cash is moving towards the cash box. So the cash account will now be debited by 6,000 and the ledger of income, that is catering services, will be credited by 6,000. Are you all fine? Are you all able to understand?
Yes, sir.
That's great. Can we continue?
Yes, sir.
The next transaction is transaction number 7. In this transaction, we paid our electricity bill in cash. To do so, we withdrew the amount from the cash box and made the payment at the electricity company's counter. The cash now moved from our cash box to the electricity expenses. To record this transaction, we will debit the ledger of electricity expenses by 1,500 and credit the cash ledger by 1,500. The next entry is entry number 8. Here, we deposited money in the bank. The amount was withdrawn from the cash box and then deposited at the cash deposit counter of the bank. If you see the direction of the transaction, the arrow is pointing towards the bank. So we will debit the Dena Bank by 5,500 and credit the cash account by 5,500. I hope you have understood this unconventional method of our arrow rule. Even if you are a student of commerce, I sincerely feel that this method will be definitely effective. I have already told you that this is an unconventional method of knowing which ledger to debit and which to credit. Later on, we'll be learning another unconventional method called Kabhi Khushi Kabhi Gum, that's in Hindi, which can be translated to sometimes happiness, sometimes sorrow. But now we are going to learn the method by which the accountants find out which ledger to debit and which to credit, understanding debit and credit the accountant's way. In accounting, accounts are classified into 3 main types. The first one is personal accounts. These represent individuals, companies, or organizations. Example: customer accounts, supplier accounts, bank accounts. If an account has a name and an address, it can be directly classified as a personal account. For example, Lalu Milk Mart, Yadav Sweets, and Dena Bank are personal accounts. Bank accounts are also considered personal accounts because they have a name and are associated with a specific location, meaning they have an address. The second type is the real accounts. These represent assets owned by a business, both tangible and intangible. Tangible are physically present, like land, buildings, machinery. Intangible do not have a physical presence, like licenses, goodwill, trademarks, etc. The third type is nominal accounts. These deal with expenses, losses, incomes, and gains. Example: rent, salaries, interest earned, sales revenue, etc. Purchases are considered expenses, so the purchase account ledger is classified as a nominal account. Similarly, sales is an income, making the sales account ledger also a nominal account. There are specific rules associated with each type of account: personal account, real account, and nominal account. For personal accounts, the rule is debit the receiver, credit the giver. The next rule is for the real accounts: debit what comes in, credit what goes out. The third type is nominal accounts, and the golden rule associated with it is debit all expenses and losses, credit all incomes and gains. Yes, this rule matches with our rule, Kabhi Khushi Kabhi Gum. It translates to sometimes happiness, sometimes sorrow. All events of happiness will be credited, and all the events of sorrow will be debited. We will understand this better when we discuss the transactions. In addition to this unconventional rule, we also discussed the arrow rule. This time, we will go through the 8 transactions once again and record the debits and credits according to the golden rules of accounting. The first transaction, we purchased goods worth 4,000 from Lalu Milk Mart on credit. Here the first ledger is Lalu Milk Mart. Lalu Milk Mart is a name, so it is a personal account. Here Lalu Milk Mart is the giver of goods, so the rule credit the giver will apply. The second ledger is the purchase account. Purchase is an expense, and all income and expenses are nominal accounts, so the rule debit all expenses is applicable. The posting for the transaction will be purchase account, debit 4,000, and Lalu Milk Mart credit 4,000. In the next transaction, we sold goods to Yadav Sweets worth 7,000. The first ledger here is the sales account, and sales is an income. So the rule of nominal accounts, credit all incomes, is applicable. The second ledger has the name Yadav Sweets, and so it is a personal account. Thus the rule of personal account, debit the receiver, comes into play. Here Yadav Sweets is the receiver of milk. The posting of this transaction will be Yadav Sweets debits 7,000 and sales account credits 7,000. In the next transaction, Yadav Sweets gave us cash of 5,000. The first ledger is Yadav Sweets, and that is a personal account, so the rule credit the giver is applicable. Yadav Sweets here is the giver of the money. The second ledger is the cash account. Cash is a real account, and the golden rule for real accounts is debit what comes in. The money has come inside the cash box. So the posting of this transaction will be Yadav Sweets credit 5,000, cash account debit 5,000. The next transaction is similar to the transaction number 1, where we have purchased milk worth 5,000 from Lalu Milk Mart. Here Lalu Milk Mart is the giver. The posting will be debit purchase account 5,000 and credit Lalu Milk Mart 5,000. In the next transaction, we paid cash of 3,000 to Lalu Milk Mart. First is the cash ledger. Cash is a real account. Money is going out of cash, so the cash account will be credited. The second ledger is Lalu Milk Mart. He is the receiver of cash, so his account will be debited. The complete posting will be debit Lalu Milk Mart 3,000 and credit cash 3,000. In the next transaction, we have received cash of 6,000 towards catering services. Catering services is our income, and so the golden rule of nominal account, credit all incomes, is applicable. The second ledger is cash account. Here the cash has come inside the cash box, so the rule debit what comes in of the real accounts is applied. The posting will be debit cash account 6,000 and credit catering services 6,000. In the seventh entry, we paid an electricity bill of 1,500. The payment was done by cash. Cash is a real account. The money has gone out from the cash box, so the cash account will be credited. The second ledger is of electricity expenses. Income and expenses are of the type nominal accounts, so the rule applies debit all expenses. So the posting of this transaction will be debit electricity expenses 1,500 and credit cash account 1,500. In the last entry, the eighth one, we deposited 5,500 into the bank. The first ledger is of cash. Cash is a real account, since the money is going out from the cash box. The rule, credit what goes out, is applicable. This money is now being deposited in the bank. As discussed earlier, bank account is a personal account since it has a name Dena Bank. Here the bank is the receiver. So the rule of personal account, debit the receiver, comes into play. So the complete transaction will be debit Dena Bank 5,500 and credit cash account 5,500. I understand that this was a long and possibly boring theory lesson, but it was necessary for you. I hope you understood it. Did you?
Yes, sir.
I suggest you go through this video lesson multiple times. From the next video lesson, we will practically enter these transactions in Tally Prime. For that, you will have to scan the QR code given on page number 25 of your book. Thank you, and see you in the next lesson.
Thank you, sir.